So this is the first time that I've done a Spaces for a little bit, and the first time that I've done something that we're going to post on YouTube outside of a conversation with Ira Harris. So for those of you guys that are not familiar with me, my name is Matt Paxkana. I'm a former floor trader. I was a big trader in the NASDAQ. I've traded in the hog pit. I started working on the trading floor in 1989 after the crash as a runner. I didn't have a rich father, rich uncle, so I had to work every job up. I think if you listen to previous videos, you'll be a little bit familiar with some of that story, my backstory. But I worked every job up on the trading floor, starting off as a runner, making $90 a week for Rosenthal it was before it was RCG, Rosenthal, and I was running to orders to the lumber pit and to the back month euros. And I quickly realized that whatever was going on that floor was something I wanted to be a part of. I didn't go to college until I was 23 years old. So I went to work at the Merck and I loved it. I walked down to that trading floor and I knew whatever was going on down there, I wanted a piece of it. I wanted to make my living there. So I did. But the problem was I didn't have a rich father, a rich uncle. I had to earn my shot, and I quickly realized who the big traders were, who the well-known guys were, who the well thought of guys were, men and women. When I say guys, I'm being inclusive of everybody, mostly men. And I quickly and I tried to ingratiate myself to them. I tried to get them to know my face. Like many of you guys who respond to me on Twitter, you know, I get to know you guys a little bit through our interaction on Twitter. It was much the same way on the trading floor. I wanted somebody like Ira Harris to know who I was, and so I would find him and say good morning to him, good afternoon to him, and start little conversations with him. At first, they didn't want to talk to me, but a little bit later, they would answer questions for a new and up and coming guy. And when they found out that I had a good reputation as a hard worker and an honest man, then, you know, then I started to learn things from these people. They became mentors to me, these guys. And I began to work every job up until I earned my shot, quite like the minor leagues for baseball. I started off as a runner. I became an ARB clerk for a small group, and I kept moving forward until I was working for a guy named Steve Mendez in the front month euros, who, if you survived a couple of years with him, you would earn your shot. Steve was interested in making money, so you would earn your shot onto as a member of the Chicago Mercantile Exchange in the pit as either a broker or sometimes as a local. I didn't want to be an order filler. I wanted to be a trader. Traders were the guys that made the most money. Traders did not have traders had an unlimited upside, and that's what I wanted to have. I did not want to have to come to work and have a ceiling put on what I could make. I wanted to be able to make whatever it was that I can possibly make, only limited by my imagination. And that's what trading does for us. Every trade that we make as futures traders, if you trade stocks and options, same thing. Every trade that we make has the potential to make our wildest financial dreams come true, theoretically. Every one contract that I trade has an unlimited theoretical upside. The problem is the unlimited downside, unless you learn how to manage your risk. So earlier this morning, I'm going to try to weave a bunch of things in here. I have Pete Dillon with me, Pete D, and I've got Jake Huker with me as well. And I'm going to try to weave in some information and some aspects of my trading process that I put together, some information and aspects of my trading journey, my own journey. I think that many of you guys are probably familiar with it, but for those of you guys that are not, I can go into a little bit more detail. Let me just say this too. I grew up on the southwest side of Chicago. I went to De La Salle High School, and I was a second generation American. I've worked, you know, I was a truck driver. When I started on the floor for my uncle, I was driving a truck in the back of the yards neighborhood. And I started at the Merc, like I said, because I wanted an unlimited upside and I didn't know how to get that any other way. So I did not come from money. I came from working hard, and I came from a gigantic hard work ethic. I've always had I've always had that incredibly, my daughter just texted me. I'm sorry. I've got 5 kids. My kids are always texting me for something, usually dope. But anyway, so I had an incredible work ethic, and I wanted to work really hard, and I wanted to be able to be rewarded for that. But here, let me just, when I started trading on the floor, I was taught how to trade the opening range. That's how I was mentored and how I was taught to trade. I had two mentors, Judd Hirschberg, Mickey Hoffman. Mickey Hoffman was like a second father to me. Judd kicked me in the ass. He was like a mean older brother. But I learned from both of them. They both taught me so much, and I'm so grateful to both Mickey and Judd. Mickey is still in my life, Judd isn't. But I can't tell you how grateful I am. Now, Mickey taught me mindset. Mickey taught me how to battle. Mickey taught me how to think like a trader, how to act like a trader, how to carry myself like a trader. And remember, I had all these other little mentors, not little, but I had all of these other mentors that maybe didn't even realize that they mentored me along the way as traders that I was able to ask questions from, watch, observe, look, and learn. I don't know how you guys do it on Twitter anymore, or how you do it out in the internet sphere of life, the meta universe, or however you guys, young guys, put it anymore. I don't know how many frogs you have to kiss before you actually figure out a way to trade that is consistent, that is profitable, and is repeatable and scalable. Now, for a trading process to be realistic, for a trading process to be real, it needs to fulfill those three things. I talk about this on my Friday podcast with Blaine. It needs to be consistent, it needs to be repeatable, and it needs to be scalable. When I started on the screens after MF Global failed, and I got caught in MF Global, I lost a ton of money, 7 figures overnight. I mean, literally overnight. I couldn't get on the trading floor. And then I just trying to trade that money back, I made it a lot worse. I was trying to trade that money back really quickly, and I just kept pissing away. I was losing 6 figures a day. It was just every day was just everything, and more and more and more, until I completely lost everything that my wife and I had. I have 5 kids, 2 from my first marriage, and they were fed. They were okay. It was my 3 younger kids that needed to eat, and so I had to figure things out. The only thing that I had to rely on and to fall back on was me. After all that money was gone, before I had gotten any MF Global money back, all I had to fall back on was me, my work ethic, my character, my integrity, and I had to develop a process that I can transfer from the floor onto the screens. So that's what I did. I got in our minivan, our family minivan, and I started to drive Uber in the beginning of Uber in Chicago, and I made some money doing that. And at that point, I started to get some MF Global money back. And when that happened, I was able to fund a small account, and I started trading one lots. What worked on the trading floor? I started to put a framework around my life, a schedule around my life. When I was happiest was when I was studying to be a Catholic priest. I did go to college when I was 23 years old. I studied in the seminary for the time I was 23 to 26. I left the seminary when I knew that celibacy was not my thing. I was never more popular with women than when I was supposed to be celibate. That was actually kind of fun. God, that's offensive. I'm sorry if I pissed off anybody there, but it was. Celibacy just wasn't my thing. 5 kids later, that's the 3rd time I mentioned I've got 5 kids. 5 kids later and 2 wives later, I've been a happily married man for 17, 18 years. So anyway, the point is that I had a schedule during those years. I had to wake up at 5 in the morning for shower, morning prayer, breakfast, mass, study, class. All of those things were scheduled all the way throughout the day, every single day. So one of the things that I knew I needed at that time of my life, when I funded the small account, like the winter of 2012, I didn't start trading it until going into the fall of 12, into the winter of 13. But what I knew that I needed to put a schedule around my life. So I started to wake up at the same time. I started to whittle down some things that became part of my morning routine, which I still do. Wake up every morning at 4:45. First thing I do is I make my bed. It's very important. Second thing I do is I do some breathing exercises. This is before I look at the news, before I look at the internet, before I grab coffee, anything. Some Wim Hof or just some simple breathing exercises. You can find them on YouTube, anywhere. A few minutes of breathing, I oxygenate my body, I get the blood flowing again, and then I do some yoga, stretching and yoga. Okay, well, actually, first I do some meditation and prayer. So I do a guided meditation. I'll pray. I'm Catholic. I'll pray a rosary. I'll pray some morning prayer out of the breviary, which is the Psalms. I'll pray the Psalms, and then after that, I do some yoga, some stretching, And then I come downstairs and now we're talking about 6 in the morning. I come downstairs and that's when I look at what the market did. I check my positions, I look at the news, and I adjust my plan and I get it out to the traders in the PAX group. That morning routine, that schedule was very, very important to me. But secondly, so once I started to schedule my day and I started to trade one lots in the S&P, and I started to make a little bit of money because I was trying to, on the trading floor in the NASDAQ, I was one of the guys that moved the market. I could move the NASDAQ, believe it or not, I could move the NASDAQ 50 points, 100 points all by myself. Now, if the market had different ideas, the market wasn't going to rally. I couldn't push it into the face of stiff resistance, but I could create that momentum where the market would follow through. And I was telling this to the traders in my pit, or in my group the other day, that in the NASDAQ pit, I had like 5-10 traders that were there when I was there. When I left the pit, and then I'm going to bring in Pete and Jake. When I left the pit, 5 or 10 other traders left with me. I mean, they like little ducklings. Like I was the big duck, and my little ducklings followed me because, I was, if I was buying 50 lots and 20 lots and I'm moving the market and I'm pushing the market higher and I'm bidding them up and I'm painting the tape and I'm upticking and downticking and trying to touch off stops and all these things, I don't want 2 lots and 3 lots and 5 lots and 2 lots and 1 lots, so the little smaller traders that traded like me would take those smaller trades. And when I left the pit and I flattened up, or I left the pit with the position, they would leave the pit too. Oftentimes. Now I'm telling the story both literally and figuratively so that you can kind of understand where I want to go with this, with the algorithms. So in the second phase of my career on the screens, I knew that I was no longer the duck, that I was a duckling, and not even a big duckling, a tiny little duckling. So I'm just trying to figure out how to trade along with the entities that move the market. And Pete Stottlemyre told me that in 2000, I traded for Stottlemyre in 2009. Pete Stottlemyre told me that in 2003, computer programs started to generate the majority of the volume. And at the point of that, this is 2013, the 90% of the volume is generated by computer programs. Whether we're talking about HFTs, we're talking about their algorithms, we're talking about computer programs, or very small amounts of the volume in the S&P is generated by people anymore. So I wanted to trade with those people. I wanted to trade with those programs. That was the duck. I wanted to trade with them, not against them. So what worked on the floor was trading the opening range breakout. Opening range is defined, that I define it now the same way that I did on the trading floor. Well, I didn't define it as the trading floor. The CME defined it as the trading floor as the first 30 seconds of the day. If you guys think I'm making it up, look at tomorrow's open at 8:30 Central Time. Put up a sub-minute bar and look at 30 seconds, or put up a minute bar and look at the volume line on a 1 minute candle, and see that before the market opens, for the first 5 minutes, we do 2,000, 1,500, 1,200 contracts in that minute period. When the algorithms are turned on, when the computer programs are turned on at 8:30, when the big duck comes alive at 8:30 Central Time, the volume shoots up from like 2,000 to 15,000. That's the computer programs being turned on. That's who moves the market. I needed to no longer fight those computer programs, but I needed to go with them as they were developing that wave that the market kind of became and is now, especially with the volatility that we have. So I started to use the 30-second opening range breakout again, the same opening range breakout I used on the floor and that worked for me for so long. So, and then I started to develop my way of trading. I trade, I trade in quarters. So let's just, for the sake of illustration, I trade 4 lots. I don't trade 4 lots, but if I was trading 4 lots, I trade in quarters. So a quarter of my unit, I pay for my trade. That's 4 points from the top of the opening range or the bottom. Pay lines are not about taking profit. The pay lines are about me removing my risk. Now I've got 3/4 of my unit on. So if I'm trading in 4 lot units, I'm long 3. Now I get to that first target, I take profit, I'm long 2. And now I let the market do its work to either extend back above the that first target up to the next target, in which case I take profit again. I've got runners on. Now that's just the bare bones basics of the way that I trade. But I've got targets that I've learned, my technical work that I learned how to generate years and years and years ago from one of the greatest technical analysts in the history of the business, a guy named Howard Green. Only a few of us actually know how to do his work. And I'm one of them. Thank God. Thanks to Judd for that. And I trade my major targets, you know, and if you guys have listened to any of the Friday podcasts that I do, I've been talking about these prices over and over and over again. To give you an idea, in the S&P, we go from 36.63 to 37.26, 37.26 to 38.71, 38.71 up to 39.12, 39.12 up to 39.74 to 40.05 to 40.99 to 41.87. Those are the major prices that are relevant for us right now. So I combined all of these things using my, you know, developing a way of living my life that brought structure to it by scheduling my life and keeping to that schedule and living that schedule, to developing a system of trading and a methodology of trading that would fulfill those three requirements that a process needs: consistency, repeatability, and scalability. I need the ability to be able to go from a 4 lot to a 40 lot. I need the ability to go from a 4 lot to a 2 lot to a 1 lot. Please hear me when I say this. The most important, and then I'm going to bring in Jake and Peter, okay? The two traders from my group who are successful long-term traders and that have gone through the process of learning this. But please hear me on this. The most important part of trading, and I'm working with a couple of new traders in my group that are trying to catch every wiggle, every move. They got to be a part of everything. Friday, I quit trading at 8:40 on Friday morning. These guys need to be part of everything. Those traders go broke. It is not about how many trades you catch. Over trading will kill you. It is not about how many trades you catch at all. That is not what trading is about. Trading is about knowing when to increase your size, to go from a 4 lot to a 12 lot, go from a 12 lot to a 24 lot, to decrease your size from a 4 lot to a 2 lot, and to not trade. Increase your size, decrease your size, and when not to trade. One of those three things, that's it. That's what trading is about. Know when to go big, go small, or not at all. Increase your size. How do you go from a 4 lot to an 8 lot to a 12 lot to a 16 lot and more? How do you do that? It takes time to learn how to do it, but you have to put that time and effort in. And you have to learn how to do it while you're being defensive and you're deploying capital preservation at every turn. This business is not about, oh my gosh, this is another thing that drives me nuts. It's not about how much money you make in a year or 5 years or 10 years or even longer. It's about how much money you take with you when you are done trading for active income. That is the only true measure of success. I cannot tell you the amount of traders that I knew that have had Ferraris and $1 million homes all over the world. And, you know, somebody was asking me about Greg Riba's stories. You know, Greg Riba had millions and millions of dollars worth of art. He had original Van Goghs and Picassos that went up in smoke and in flames after he had already gone broke and it wasn't insured. You know, Greg Riba was one of the best fucking traders in the S&P and the S&P options. He really was. In that movie Floored, he had subtitles under it. It was very sad, I thought. In that documentary Floored, he had subtitles under what he was saying. But that movie did him an injustice because in real life, Greg Riba was a really, really good trader, really, really sound. Anyway, now I have in previous YouTube videos, I've gone through details of my process of trading and how I look at the market, how I see things. And I do a podcast with Penny Lane Blaine. Me and Blaine do a podcast every Friday for the Place Your Trades Network. And so everything that I'm talking about in details to my process, you can go back and listen, or you just go to the www.thepaxgroup.org and sign up for a free trial and come see what we do. Come see how I trade. So I'm not going to go into too much detail. I've done that before on plenty of spaces and other videos. What I want to do is I want to bring in two traders that have been with me for a very long time. Peter D and Farmer Jake. Peter Dillon and Jake Kuker. Some of you guys, a few weeks ago, I had tweeted about a trader that had experienced wild success since he's refunded his account. That's Jake. And Jake has absolutely no problem coming in and actually talking about it. I asked him to come in and do this video with me and Pete last week just kind of assuming that he would want to be what's the word, incognito, protect his anonymity. But in order to lend credibility to his success and to the success of other traders in our group, and me and all of us together, he thought that he would do like I do. He would be out there in the open and he'd be able to answer questions. And Pete Dillon is an immigrant from Australia. I love calling him that. He's legal. He's gone through the proper, he's a great kid. And Peter is partnering with me in the PAX group to help bring new traders into our group and to mentor new traders and help them get set up on the domes. My computer somehow broke, so I've got to take it in tomorrow. I'll be trading on my MacBook tomorrow morning if I trade it all this week. Actually, I will trade. I will be interested in trading. Wednesday will be busy. And also Friday, the day after Thanksgiving, is one of my favorite days of the year to trade, if there is any movement. It always has been, going back to the trading floor. Mindset stuff. Mindset is the most important part of trading. Don't ever neglect your emotional capital, your spiritual capital, and your physical capital. I work out, I sleep, and I eat well. I live well, and I adhere to my schedule. That helps me continue to become the best person I can possibly be, which equals out to becoming and being the best trader that I can possibly be. We are all in a state of being and becoming, as St. Thomas Aquinas talked about. So I'm trying to maintain my state of being while I am becoming better every single day. Do better, be better, as my mom used to say. So anyway, everybody, please welcome Pete, so sweet, and Jake Kuker. Here, I got the soundboard. Fucking clapping.
Hey.
Oh, Pete. Obviously, that's Pete with the Australian accent. And then
yeah, thanks for the great intro. Thanks, Bax. Appreciate that.
I can't wait until everybody sees the video that we did, because when I was going through, that little introduction that took about a half an hour, you and Jake looked like you're about ready to take naps.
No worries.
Good. Thanks. Happy to be here. And yeah, for everyone that doesn't know who I am, like I've moved over from Australia. You can probably tell by the accent, it's not from the south side of Chicago like Pax. But I've been out of Australia since 2017. I've lived in Singapore, I've lived in Mongolia, and I've lived in the US, Chicago, for the past almost 4 years. And I've been working with Pax for almost the majority of that. So I'm very thankful to him, and for obviously being the mentor and coach, and guiding me along this journey of trading.
How long did it take you, Pedro? How long did it take you, would you figure, before all right, so let me ask you. I always recommend to traders when they come into the group that they trade on a simulator, and so many people think that the simulator is a waste of time. But I think the simulator is a great tool. I don't think it's where we should be living as traders, but I think it's a great tool to work out issues and to get remember the 3 parts of the PAX process: mindset. It's all cliche-ish, but the 3 parts of my process are going to be mindset, execution, and technical awareness. I differentiate between technical analysis and technical awareness. How long did it take you before you got those 3 things down so that you felt comfortable to trade? And I don't mean, in the aggregate, that, not with the birth of your son and everything where you took time off, but, just, together. What do you think it was?
Yeah. Yeah, like you said, it was a bit tricky to put a time on, because I did take some time off when my son was born. But I would say, I don't know, I traded on simulator for like a year straight. I think it was about like that. But I was like your typical trader, like I want to get in there, I want to go live, I want to size up, let's go. I'm making money on sim this week, let's go. But looking back now, it's not about that at all. It's about building that foundation and that structure to be able to do it consistently, and be confident about doing it consistently too, because that's 2 different things. And you're going to trip and stumble, and can you get back up and not dig yourself into that hole that that can really bury you. And yeah, probably about a year, I would say, on the simulator. But it's still moving forward with things now. Just when you think you've overcome one hurdle, another one comes up.
You're punched in the face with another one.
along the way, you know, I've learned to deal with those things, and you know, be aware of it in the first place, because, you know, a spell of bad trading typically starts somewhere way else away from the screens, for me anyway. And so it's sort of, you know, being aware of that, picking that up early, and then, you know, making the adjustments if I need to, or take some time off, or just, you know, just sit with that idea or sit with that issue that I have at the moment, and then sort of be able to work around it or work through it, or you know, move past it. So yeah.
What do you figure, that not just in your own experience, but the experience that you've had? See, that's one of the things that I'm so grateful for on the trading floor, is that I've had, not only have I've been involved in clearing, I've owned part of a clearing firm, I've had my own prop group, I back more traders than I can count. So I've got, and I've watched traders, and I've learned from traders that maybe didn't even know that I was paying any attention to them. But I learned from not just my experience, but the experience of hundreds and hundreds of other traders. In your experience, since you've been here, and you've got to learn from the traders in our group that you've helped coach and mentor along the way, you know, help them get set up and all the other stuff, what do you figure is some of the biggest challenges and hurdles that new traders have to overcome?
I think one of the typical things is, you know, they come in and they're ready to go. Let's jump in. Let's buy every wiggle, sell every break, or buy the dip, sell the top, and then rinse and repeat. And then, you know, it might work for a week, it might work for a bit, and then all of a sudden one day comes along and it's a real choppy day, and then boom, they're blown up. So I think that comes back to where does that originate from? Probably like something within themselves, like the need to make money, the need to be right, the need to so some sort of emotional balance or imbalance or something like that, where it comes from, like, all right, I need to do this to prove something to myself or someone else, or something along those lines.
That's huge.
Yeah, and you know, a lot of the time the trader or traders don't really realize that for a long period of time, where they're just like, you know, I can do this, let's make some money, let's go. But you know, the further you get into it, the deeper you have to go into yourself, and you know, if you don't, the trading or your P&L or the outcome will sort of force you to, in a way.
Putting yourself under pressure to either putting yourself under pressure to make money doesn't work, you know, and putting yourself under pressure to perform doesn't work. If you put yourself under pressure to make money, and this is something I think Jake can relate to, certainly, if you put yourself under pressure to make money, then you're scared money. Scared money never makes money. That's just, it doesn't happen. At least scared money does not sustain making money. Anybody can make money trading futures. Anybody can make money. It doesn't take a whole lot of ingenuity and skill to be able to click a mouse. Every trade that you make, you've got a 50-50 chance of being right and making money on it. However, you know, it's about how you keep it, how you grow it. And to do that, you have to be, you know, what we call in our group, confident, carefree, fearless, and focused. To what I call confident, carefree, fearless, and focused. If I can be CCFF and I can know to what degree I am in the morning, now I can go ahead and I can take action. That's the first decision. And this goes between 4:45 in the morning and 6 in the morning Central Time when I wake up to the time I come downstairs. When I start going through my morning routine is when I can first determine what size I'm going to trade. And that's long before I get to the screens. You know, am I confident? Am I confident, carefree, fearless, and focused? Do I have pressure to make money? Do I have pressure to perform? Do I have pressure to impress anybody for any other reason? That's been something, since we've had the group, that's been something that's been a challenge for me. You know, I've taken a lot of trades in order to show people how to trade or to impress people, or, you know, and I've always got to protect myself from that, because, you know, what I'm trying to do in the PAX group is I'm trying to empower you guys through my experience to avoid the mistakes that I've made all throughout my career, and to learn from the things that I have done well, to learn from my successes. And that's why I wanted you and Jake to come in. Jake, are you here? Can you hear me?
Yeah, I hear you all right. Mute, you're on Twitter.
Jake, you need to unmute in.
Yep, there we go. Yeah, I'm muted on Twitter now. Yeah, I can hear you. Matt. Where do you want me to start?
You
just
know,
a little
like,
background or
yeah, give everyone a little background on you.
yeah, yeah. So I'm a farm kid from Iowa. Well, I'm not a kid anymore, but mid 40s. Grew up on farm in Western Iowa, and you know, uh, I've known hard times and you know, lived a lot, not the same experience as you, but you know, I definitely can relate to some of the stuff you're going through when you know, you're going through MF Global and I, you know, I've been up and down over the years. I've had a trading account probably for 25 years, but where I started was just, you know, trading through country brokers like you know, hedging corn or soybeans or whatever. And I still farm a little bit today at you know, where you pay, you know, $100 a round turn or whatever, and you know, call your broker and make those trades. And that's really all I really knew.
$100 a
And,
round turn. How about that? Everybody
yeah,
complains about
it's
paying
cheap.
$1.50 a round turn. When you first started off, the floor was a C note, a round turn.
Yeah, and it's cheaper now, but you know, and those are probably, you know, I'm talking 25 years ago, you know, you didn't have access to you know, every tick like we do today, you know, and I mean, they were still calling the floor more than likely then, if they didn't have the programs. But you know, that's where I started trading at, but never really knew much about it or knew how to do it for a lot of years. And then I slowed down farming, you know, backed out of it, got well, I'll just put it out there, you know, this honest and clear conversation. I got over leverage and I had to back way out of my operation from where I was. So I had to trim way down. So, you know, through a lot of soul searching and everything else, I decided, you know, I want to be a commodity broker. I want to trade futures and options. I want to learn how to do that. And the only connection I really had to this business was knowing commodity brokers. So, you know, where you start, you know, I had no idea about guys like you or whatever. And I'm talking probably 5-6 years ago, going down this road. So, you know, I went out and studied and got my Series 3 and did some brokerage for a person or two, you know, over the years. And I'm still doing that to a degree, but I probably won't go into that too far today, which I probably should say right off the bat, past performance is not indicative of future results.
Hell no, it's not.
Yeah. So at any rate, you know, I you know, started listening to podcasts and stuff like that and stumbled across Anthony Crudeli's podcast there, and you know, started listening to other traders he interviewed, and you know, listened to you out in there obviously, and just kind of found you through that way and through Twitter. So then, you know, I've been part of the PAX group here for going on what, almost 3 years now, I'd say. So yeah, I've been in the group that long.
So
I'm
what
kinda-
were
go ahead,
well
go ahead.
in your how has your journey as a trader taken shape in the last couple of years since you and I have known one another?
So first of all, I figured out how people actually traded on the screens as far as, you know, the intraday stuff. You know, and that was something I really had no idea about, that, you know, people really did that, you know, same type of things that they did on the floor. So, you know, obviously getting in a group there and just getting into the mindset stuff and going down the road, a journey as a trader, you know, just opened my eyes to a lot of things. And it's been a slow progression, but I'm a little older, so I'm kind of a slow learner. But I've been pretty methodical about it.
Very methodical about it, and that's you know, I think as in our work and in our one-on-one mentoring has gone, you know, I can see the changes in you, but you've always been very methodical and detailed about your progress. That's one unique aspect that you bring to your trading. Another one is your view of money, and we've talked about a lot about this in our group mentoring or just in the room. You know, your view of money as I don't, for lack of a better way of illustrating it, you know, your view, and I think since this maybe came about or came into a real mature sense after you had really had to tail back your farming operations after over leveraging, is you view money as an asset to be used, not as a liability or something to protect and hold on to and hoard. So you don't have any fear of losing money. You don't fear the market. You don't fear losing money. You've been there. You know, like I said earlier, that you can always count on yourself to continue to rebuild and to continue to move forward and to do okay. So that sets you up. Once you've been able to put together the mindset, the execution part of it, and see how you fit into this process, that set you up for not the culmination, but for the climax that you have reached in the beginning part of your career as a trader. And I do believe that these last 6 months since July is really just the beginning part of your success. But that's what set you up for this. I mean, how would you see that? I don't want to.
Yeah, no, it's absolutely. It's it's the fundamental work on the thing. It's like I said, we're not scared. Money never makes money, right? And
Right.
It's not a sin to be poor. It's just damn inconvenient. But you got to start somewheres, and you get to a point that you've been down this road. They always say, making your first million is hard, making a second is easier. However you want to describe that. But if you've been without money before, and you've made money and you've learned how to hold on to that, you're not scared to be broke, because you know how how it is. You've lived it. Does that mean you want to go there?
I lost you.
Not at all. But did I drop off
Lost
the
you.
Twitter there for a second?
There you go. Okay. I lost you.
Yeah.
You know how it is when you're not afraid to be broke. You know how it is. All right. So that.
It doesn't mean you want. It doesn't mean you want to go back to that, but you don't need to. You don't need to be fear of the other shoe to drop every day. You're not afraid. You can't be afraid to live life. Get busy living.
One of the things that I talk about a lot, I do it, even the podcast that me and Blaine do is called Capital Preservation. And Pete and I in our plans, when Pete and I will put out the plans, Pete's so sweet, that cracks me up every time I look at his Twitter handle, makes me laugh.
You're welcome.
Oh, fuck. Anyway, when Pete and I put out our daily plans on Fridays, Capital Preservation Friday. So when capital preservation is at the foundation of everything that we do as traders. We are preserving our capital. If the beginning balance of my statement says $10,000, I don't want it to be $9,000, but I'm willing to spend some money to make money. I don't have losses. I don't lose money. I do. I try not to, but I have expenses. I spend money in the market to make money. I had to, in order for my mindset to really come into a real mature view, I had to change some of the ways, some of the language that we use, right? So instead of loss, I think of expense, because loss is by definition focused on the past. And as traders, we can't be focused on the past. Expenses, in my mind anyway, expenses are inherently focused on the future. So if I'm spending money to make money, as opposed to lose money and manage that risk. So if I buy 30, I don't want to get too far into this, but if I buy 37s, and that market goes off it, I'm out. That takes a while to get used to executing like that. I'm not going to wait for the market to go 35 offered before I get out. If that market doesn't go 37 half bid, I'm getting out. Now, again, it takes time to develop that execution skills. But the point of this is that capital preservation is at the basis of everything we do. Now, the most important aspect of trading is knowing when to go big, go small, or not at all. Knowing when to go from a 4 lot to a 40 lot, period. And knowing how to do that is a skill that takes time. Both of you guys had mentioned that it took you time before you were able to start to develop the skills necessary and put the pieces of the pie together, put the mindset, put the technical awareness and the execution aspects of trading it together. So everything started to fall into place. I was in the car. I'll never forget this. I'm driving down the road. It was this summer. Do you remember where I was, Jake? I'm in the car when you called to tell me that you were refunding your account.
Were you going to see the indie animals?
I was driving home from yeah, driving through Indiana, leaving the indie animals. It's exactly right. I'm driving home with my daughter. I picked her up from camp. Me and Maggie are driving through the car and you call me. It was a Saturday morning and you were going to refund your account, just a micro account. You're just going to refund a micro account, $10,000, you know, and you're going to take it from there and you're going to trade. Do you remember what the size was that you started trading?
I think either four lots, you know, 4 lots or eight lots, you know, and kind of went from there one week after the next and incrementally.
A 10 lot to
yeah.
20 lot to 40 lot to the minis. So,
Yeah,
but the point of that, there's something in there that I want to say, and I don't say it enough. You know, the aspect, and Pete is experiencing this too firsthand, the aspect of capital preservation. You know, we don't take shots as traders. I'm not a gambler. I'm not gonna, I'm not gonna start throwing spaghetti at the wall and hope something sticks. I may as well grab a pair of dice and roll it against the wall and hope I don't crap out and hit my point. That's, you know, that's no good, and that's not a trading strategy. However, I've got to have the ability to be able to know when to take a shot. I need to have the ability to be able to man up and put my big boy pants on and say, I like this area. I'm going to buy them. And if it works, it works. If it doesn't, I'm out. Remember, I say this all the time. I tweet this all the time. If it's not easy, I don't want it. So again, and that's the, you know, if I buy 37s and that market goes 37.5 bid, I'm on to the best part of trading, which is managing profit. There's only 2 types of every trade. Not 2 types. There's only 2 parts to every trade: managing risk and managing profit. I manage my risk the same way on every trade, but I manage my profit differently. So you funded your account this year, micro account. You started off trading 4 lots. Within a week, you had 20, 30 micros on that you were managing. How did you do that? How did you turn your small position in July at 30? We were trading at 36.63 in the S&P when you started trading it. Do you remember the prices that you traded? And do you remember how you sized up specifically?
I mean, yeah, to a degree, and I'll say too, you know, part of this whole journey is just, you know, like we always talk, you know, everybody's looking for the secret, the secret to success, or the all perfect answer or whatever. And, you know, after enough time, you figure out that it lies within you. It lies within yourself, and it lies within getting to know yourself. So just to put some context to that, timing was right. And, you know full well that I bias, or I'm a better trader to the upside than I am the downside. And, you know, when all that started going on, when I refunded my account, really kind of got back in the swing of things in, you know, midsummer, you know, we're at that 36.60 level, and, you know, just kind of, you know, had the set of numbers that we just added at key levels there. You know, I mean, and that trade ran till 43, what was it, 43.24, you know,
43.24. 43.27 was the high. 43.27 was the high of that move, and I think we got there in August. 43.24 was our upside target based off of 2020's price action. So, you know, we went from 36.63 to 37.26. You first got long at 36.63. You took profit at 37.26, and you added above that. Then you used the opening range from 37.26 to 39.12. And you continued to add up there using the opening range to your position.
You know, and this might sound, you know, crazy to you, but or maybe some other traders in here. I don't really know, but like, you know, in my mind, 5-10 years ago, I thought, let's, you know, how we're going to trade. We're going to buy whatever, whether we're buying corn or soybeans or buying S&Ps at 3,700. We're just going to buy them. We're going to hold them till they go to 4,500. Like that's one trade, right? Whether that was 2 days or 5 months. And you know, what's taken me a long time to figure out, or years to figure out, is how we do this, is how we, you know, whether we're short or long, but how we get in at one spot and we take profit and add to positions, and, you know, and then start to build a core position around that.
Yes.
And that took a long time to figure that out, because, you know, if I'm making money on this thing, why would I want to get out of them?
Yes.
But if you don't take profit along the way, it's just, you know, all in, all out. That's pretty tough to pay the bills on. Day in and day out.
When you take money, when you pull some money off that trade, You know, you pull some money off that trade, you bank that money, take it out of your account, you manage your trading account the way that, you know, we've talked about. When managing your trading account is just as important as managing a trade, and not too many people ever talk about that. At least I don't see it. Managing your trading account is so integrally important. I just made up a word. It's so integral to a long-term profitable trader success, properly managing your trading account. So you get long, you take profit. Now that enables you to hold the trade up to a bigger price target, and you take that money out of your account and you protect that money. Now, if you want to increase your size, you either use money you've either used capital that you've earned on the trade. So theoretically, the whole idea is that if I'm going to take a position home, I should have earned enough on that trade to be able to cover the margin on it. So that's the same thing with adding, theoretically, right? But we're going to add during the day because of the leverage that futures provide. We're going to use that leverage in the managing our profit waste, managing risk the same way. We buy 37s, it goes 37.5 bid. Now I'm looking to take profit and let that market continue to run to the next level. Properly managing my trading account along the way, which enables me to properly manage my position along the way. So when we get to that next target, you're already looking to add to your position. You can always add the position back. You can always go, you can go from a 4 lot to a 10 lot.
And that's a hard concept to get to wrap your mind around if you're not,
Why is it?
not
Why?
used to it. I don't know. It was for
Most-
me anyways.
think
Maybe
of
it isn't for others, but it was a hard concept for me.
For every trader in the history of trading, most traders, it's easier for traders to average their losses. It's a lot more difficult for traders to average their profit, to add to their profit. And that's what great traders learn how to do. Great traders learn how to add to a profitable trade in the right sense. The whole idea of adding to your trade is to add to your position without
Adding to your risk.
Yeah,
without
to
adding
risk.
to your
And
risk.
I think that
leverage
comes
more
down
profit.
to like a huge like mindset thing, right? Because like it made me, I just gave like this thought just came to me. It's like when I first started trading, I would go and look through, you know, journal how many trades I had a day, and I always, on the days that I was down money or started down, I would have way more trades than on days where I'd be like up money, making money, you know, like it's that whole mindset switch of, all right, I'm down, I got to get it back.
Yeah.
Versus, all right, I've got them on, let's not stuff this up. Whereas, yeah, it takes time to shift that. And then I think I called you a few months ago now, Pax, but and you told me, let the market size you up. And you've been telling me that for ever since I've like we've met, right? But like until I've actually understood it and felt it, I was like, oh, that makes sense. Okay, I'm not just adding at this level because, you know, we're moving above it. You gotta feel it, you gotta see it and take it.
That's such an important point. Before you can get to the idea of, I hope I'm not stepping, you guys, if I'm stepping all over these guys, please let me know, tweet
Sure.
me. I want them to talk. But let me make this point. Hold on. Let me make this point before. All right. So, because this is important. Pete just said something brilliant. When he first started trading, he was over trading. He was trying to catch everything, and he had all of these trades. You know, when I started trading on the screens, I quickly realized that on days where I've had 5 or 6 trades or more than 5 or 6 trades, I was losing money. I quickly realized that with more than 5 or 6 trades, if I made more than 5 or 6 trades in the S&P, I was losing money. Trades that were either not that either I didn't pay for or I didn't scratch. If I had 5 expenses or more, I was losing money. So you had to unwind that. As you said, Pete, that took a while to unwind, right? And you had to unwind that before you were able to finally see how to let the market size up. You had to learn another one of my catchphrases, you know, besides let the market catch up or size you up, is the less we trade, the happier we're going to be.
Yeah, I mean, there's a lot of other things that had to unwind as well, right? Like a big thing for me was really viewing it from a business mentality. There's a long period of time where, you know, I turn on the news, everyone's wearing a suit, everyone's using these big fancy financial terms. I don't have financial background, you know, like who am I to make money in this business? You know, like I don't understand 100% of what they're saying, or can I replicate it? So I sort of had that sort of negative mindset of doing that, as well as not viewing it as a business, more like just like, oh, let's slap them on and see what happens, and prove myself right. And yeah, there's a lot of things I had to unwind, and perspectives I needed to shift. And yeah, those were the main ones for me, for sure.
Isn't that crazy? That's it's such a simple concept, yet when we sit down in front of the screens and we put that mouse in our hand, it's so easy. I've been doing this for 25 years and it's still very easy for me to overtrade. My worst days, last Monday was a great example. I talked about it Friday. Last Monday, I forget what we did. There was a number that came out. I forget exactly what happened, but I expected the market, maybe where we opened, I expected the market to do something on Monday. We didn't do anything. We traded in and around the opening range for the first couple of hours of the day. Those are days I can lose a ton of money. And I mean a lot of money. I can lose a lot of money on days like that. So I've got to protect myself. Capital preservation, 4 or 5 trades. If I'm making more than that, I'm in trouble. And if I'm getting myself in trouble on a day like that, then I'm going to miss a day like Wednesday when retail sales came out, or Tuesday when retail sales came out and the market exploded higher and I was long from the Friday before. I'm going to miss that day because I overtraded the day before. If I overtraded the day before, I'm going to miss the opportunities to let the market size me up. I need to live to fight another day. If I made $100,000 on the trading floor, if I lost $100,000 on the trading floor, everybody would ask me, "Hi, how's your day, Pax? How's your day?" And I always said the same thing. I live to fight another day. I could have made $1 million. And I've had 7-figure days before. I could have walked off the floor knowing that I had a 7-figure day, and I would say, "Oh, live to fight another day, dude." What were you gonna say, Jake? Before I step
I was
on
just
you?
gonna. That's okay. I was just gonna say I didn't know if you wanted to open it up for people on Twitter to ask questions or not live,
I don't know how in the hell I don't know how to do that.
because I
But
know
yeah,
there
we
was a lot
can.
of questions on Twitter. From earlier, and
All right, you mean from when I tweeted? All right,
from the thread.
all right, let me give you a bit of background. Jake, on a last Friday, not last Friday, like 3 weeks ago, I tweeted on a Friday, a copy, not a copy. I snapshotted, whatever you call it, right? I took a
Text
screen
message.
grab, part of a text message from Jake when that week the market ended up having a big rally from, I can't remember what the low was, but we rallied all the way up to 39.12. And 39.12 is one, if you listen to those Friday podcasts, 39.12 is one of those flatten areas, flatten targets that I have in my work. And Jake really adheres to those levels, using the opening range as the guide to get us between 37.26 and 39.12. And he flattened at 39.12 and he sent me it's still up on Twitter. You can go read it. And a lot of people didn't believe it. So Jake is a trader that made a couple $100,000 in that run up from 36.63 to 39.12. Now he wasn't trading micros at that time. He was trading minis. He was trading micros in the summer when he refunded his account, to be clear. And he caught that move from 36.63 all the way up to 43.24 trading micros. So he used that to let the market size him up in a different move, similar to the same one that we had, only not as high, not as far, but he was able to size up more effectively. And because he was able to size up more effectively, he didn't need the market to run up to 43.24 in order to be able to take 6 figures out of the market. So does anybody have any questions to ask him directly on that? Raise your hand and I'll, however this works on this.
Yeah, I think
Isn't
you can
that-
unmute him.
What 36.63 to 39.12, like if you look at that on a chart, like isn't it crazy how we get like so sucked into the minutiae of the price action, whereas like if you look at a daily chart or something, that's like look at the movement that we've moved in the quarter, like that's just proof that you don't need to catch every wiggle or overtrade, or
Right.
like on a day where you're not seeing it, you don't need to push, or if the market's not doing anything, you don't need to push. It's
Yeah,
I don't know. That's crazy, isn't it?
it is.
It is.
And there's other traders out there. Like I said before, I favor the long side, you know, that's something I struggle with and
So do I.
will, you know, still work on, but you know, there's other traders
Not
that
me.
caught that same great move, but they caught it the other way. And
I suck on the long
you
side.
know,
I'm not
and
a
I
good
didn't
long
need to
side
catch it
trader.
both ways. Just need to catch a chunk at a time.
I'm not a good long side
Level to
trader.
level.
I don't trade the long side very well. I trade the short side well. I mean, I've had a great year on the short side from 48.08 down to 46.36 down to, you know, 45. Do you remember the levels on the way down, you guys? Can you name them? Can you rattle them off? 48.08 was December's expiration target. Do you remember where the yearly opening range was for the year?
I wish I did.
How about this? Do you guys remember? It was New Year's Day. We had our small group one-on-one meeting to talk about the price action for the year. Do you remember what I said about the you know, about the way that we do my work, about that setup, you know, from the yearly opening range, 47.58 to 47.71 was the yearly opening range. Do you guys remember what I said? I hope you do.
I wasn't in that one. Still
You
on
guys are jagoffs.
vacation.
That it was bearish.
We
That
had
it was,
this conversation.
you guys suck. That the price action was bearish. That the yearly opening range that we had was bearish. You schmucks don't remember. You weren't okay. You weren't there. Pete, you don't remember that? And 48.08, we made the high of 48.08. So I was favoring the short side. We came down through the yearly opening range of 47.71 to 47.22, 47.22 down to December expiration price. What is that?
That is 46.36.
46.36 down to the yearly upside target of 2020, 45.42, 45.42 down to 44.65, down to 44.09, down to 43.24, down 44.24 was a 200-day moving average coming down. And we took a lot of profit down there. Same thing on the short side as on the upside. Short at 46.36, take profit at 45.42, add underneath there, take profit at 44.64, add underneath there to 44.09, take profit, add underneath there to we had a lot of congestion in there, to 44.24, the 200-day moving average on, add to 44.09, add underneath to 43.24, and all the way down to 36.63. The market has memory and will continue to repeat the same patterns over and over and over again. And the market always gravitates to the same prices. You guys write these down because you'll see them over and over and over again. 36.63 to 37.26 to 38.71 to 39.12, 39.12 to 39.74 to 40.05 to 40.99 to 41.87. Now, I wanted to go through all of that because on the downside, the market will do on the upside what the market did on the downside. Not always an equal measure, but it will trade those same prices. If we take out the low 35.02, if we take out that low, the December the low of the December contract 35.02, then we will trade down to 35.53. Do you guys remember what I said in September when the S&P expired? What did I say? We expired at 38.71. What did I say that night?
You said, I think this next quarter looks bullish, but it's going to probably trade lower first if I had to call it before it goes higher.
I don't like making big market calls, and everybody on Twitter knows that. People will ask me what my opinion was, and I always say, going back to what Peter said, I'll let the market lead me. I'll let the price action lead me, and I'll let the market size me up. I don't like making market calls. When people talk about, is the bottom in? I don't know if the bottom's in. Frankly, I don't care if the bottom's in. I care about what the opening range is relative to my targets. That's what I care about. I care about when the market gives me a chance to take profit out of it. Going back to what you were saying earlier, Jake, and you know, I care about the opening range, getting them on, and I care about taking profit in front of targets, and I care about adding above them or below them. And I care about managing my accounts the right way so that I can continue to stay focused on my process. Going back to what you were saying earlier, Peter, if I can stay focused on my process, I will not stay focused on my performance. If I stay focused on my process, the performance will be there. If I focus on my P&L, I'm going to, and that's my main focus as a trader. The P&L will not be there. It will not be there as strongly or as consistently or as repeatedly as it would be. I asked everybody if they wanted to talk and ask you questions, and I haven't paid any attention if all right, you guys on Twitter, if you want to ask Jake any questions about how he was able to pull 250 out of the market in that run up, feel free to raise your hand and ask, or Peter or either one of us to jump in and talk with us. That's why we did this on a Twitter Spaces. Now there were some good questions earlier too. Flurry had asked something. You mentioned all right. Now this is important. You Flurry had asked earlier. You mentioned not knowing a trader that fades keep their money. Okay. Now there's two, and I wanted to make 2 points about scalpers and faders. I know a lot of traders that have made a lot of money fading markets. I've made a lot of money fading markets, but realistically, I don't know any of those traders that have kept that money. Inevitably, you know, when traders that fade markets, they buy breaks or sell rallies, inevitably they wind up giving it back. I can't tell you how many traders I've talked to that have made a lot of money the last couple of years that are down a ton of money. And I mean traders, not investors, people that are down a lot of money for the year just because they, you know, what they did to make that kind of money, fading markets, all of a sudden stopped working and they were averaging losses. Because remember, going back to what Jake was talking about, most traders, it's easier for most traders to average losses than it is for them to average their profit. And the way that traders get rich and make a lot of money is that they learn how to add to their size. Capital preservation at the core of everything you do. At the same time, knowing in what circumstance and at what time are you going to let the market size you up, and what Pete reminded us. How are we going to do that? Whatever way you're going to do it, you need to do the same thing 100 times out of 100 and not veer from it. We've got a new trader in our group that kept buying them in the middle of, you know, in Friday's opening range, 39.87. We came out of the opening. I missed it because I aggravated the shit out of me. I missed that entire break. We came out of the opening range to the downside on the first attempt. I was wrapping up that podcast, so I missed the trade. 39.87 all the way down to the lower target. I forget what the low was, but our lower target was 39.44 to 46. I think the low was 39.42 half, right? On Friday. My computer's broken. I can't see what it is. It's all off my memory.
Close. I can click on it, but it's close.
So this particular trader ended up getting long at 39.54. And we rallied up to 64. And he told me he's long at 64 and he paid for 54 and paid for his trade. And I said, no, that's the passport to poverty. Don't trade like that. Well, the market ended up going down to 42. So instead of him being short from 87 and going with the duck, you know, remember the illustration I used earlier, going with the ducks that create the volume and create the momentum of the market, going with that wave. We're underneath the opening range. We're underneath 39.74. So in the macro stuff, we target 39.12, but this is a trade. We're not expecting it to get that far. We're taking profit at 60. You got to look at the plan. I forget what it was, but 39.59 was the first target. Underneath 39.59, the second target. Look at the plan and tell me if I'm not right. Underneath the first target, 39.59 was the first target. Underneath 59, the next target, we had a price point at 64. Underneath there, first target 59. Underneath there, the next target was 44 to 46.
Yeah, that's right.
So by the time we got down there, now you've got your runaround, right? That's what our process calls us to do. Be short from 87, pay for the trade at 83, take profit at 59, take profit at 44. Not to be fighting the momentum of that market by getting long at 54. Okay, great, you made 10 handles on the trade, but you made 10 handles the hard way. And if you make a habit of doing that, next time you buy those 54s, the market's going to be trading at 39.12 and you're going to be buying more. If you liked them at 39.54, you'll love them at 39.12.
Yeah. One of the things you say all the time, and you know, and it didn't make sense right away, and it's just, you know, I'm the kind of guy that's got to get the same thing beaten in his head over and over and over again for it to make sense. But long story short, you always say, you know, I could give you guys all the high and low of the year, and most of you lose money. And it's true, because you have to learn how to, you know, how to execute it. And it doesn't mean we're going to execute, or I'm going to execute everything perfectly right. And I don't need to execute everything perfectly right. I mean, I don't need to be involved in every trade is what I need. No. What I mean by that. I just need to catch what I need to catch, and that's it.
all right, so this goes to you and Andy, and I won't see Andy's last name because I know he wants his anonymity. Andy's a trader in our group who has made a huge amount of money this year too. One of the things that I respect, Peter is just a super consistent trader. He's just, he shuts it down really quickly. If he doesn't find the momentum in the market, he's not, Peter, how many trades do you figure you take a day? You shut it down after a 5 trades, 4 trades, 3 trades, 2 trades? How do you do it?
Expenses, I'd probably say, yeah, probably for expenses. But, if I get paid on a trade or scratches, I don't count them. So probably around 4 for expenses, I think.
Okay, 4 expenses, and you're going to shut it down. And he's disciplined about that. So when he finds the momentum in the market, his expenses in the previous day shouldn't exceed more than $800 trading a 4 lot. And that's on the high side. So by the time the market gets to our pay line, he's already up money and from the next day. So he's very consistent because he limits his expenses. And that's the whole key to this whole thing is to limit your expenses and to be consistent. That sets you into a position of pulling a ton of money out of the market, like I have in some circumstances, and like Jake has, and we're in a public sense in the last couple of months in that rally. But what I respect so much about Andy and so much about Jake is, especially Jake now, Andy's not here, Jake, is that he's not trying to make 6 figures in every trade. He's not trying to make another 200,000. What did you do after you made that dough besides text me? And then, I texted it and tweeted it out to the fucking world and touched off a firestorm.
Right. Yeah. No, I mean,
how did you manage your account and what did you do the following few weeks?
The following few weeks, trade wise, I tried to, stay long. That's my bias is long, but I wasn't as aggressive the next few weeks, and I pulled dollars out of my account.
You took the money out of your account,
and I put some money into something solid that I need, so that it's a store of something when you need it. It's not. And that's hard. That's a hard concept to get to because it's, you see numbers flipping on the screen, you can see the account balance, but you gotta make things real. I mean, if you're on margin call and you got to sell something that's worth $100,000, it's going to get real quick. So, I mean, on the converse side, you should probably pull it out and, put it into something that's that if you drop on your foot, it's going to hurt too, to a degree. I mean, that's what I like to do.
That's funny.
I mean, not with all of it, but I have bills and expenses just like everybody else on other projects or other things I'm doing. But I try to make that money real. And at the end of the day, I really, we're not having this space to sit here and brag. I mean, at the end of the day, I'm a humble person. I want to stay humble. But you have to convert it into things that are to make it, what do I want to say? To something physical things.
Real. Yeah.
To make it real in your own mind to a degree. So
like the numbers on the screens, like, I don't know, I've sort of started having that feeling too. It's like they're just numbers, they're not real. Why should I be so attached to it? Especially when I'm trading, right? You don't want to be attached to your P&L like every tick or whatever. But it's
right, but you can get married to it real quick.
Oh yeah, absolutely.
I don't know why it is.
Yeah. The topic of money and relationship to money and everything's huge, obviously. And yeah, I don't know how to explain it, but I've sort of just had a sense of like a separation away from those numbers on the screens. But yeah, you got to bring that back at some point, right?
Yeah, and get that physical separation somehow or another. Even if you're going to turn right around, put it back into your account. It's just the process of it.
The process, and that's something that you and I have talked about. The process of putting you want to go from a 4 lot to an 8 lot. Okay, you don't do that because you made money. You made 20,000 for the week. You don't do that because you made 20 grand. You don't just go from a 4 lot to an 8 lot. You take that money out of your account. You make a good business decision based off of all kinds of other factors that we've talked about, and that we'll talk about as we move up forward. You make a good, solid business decision for you and your family. But you want to go from a 4-lot to an 8-lot, you take that money that you've already removed out of your trading account, you put it back in, you fund your account to be able to trade that. You don't trade it just because you've got the extra, the money, you got that extra money in your account. That's one of the problems with IB, you know, the IBs with the lower intraday margins is that, you know, I made $2,000, and so I can add now, what is that, $500 a day margin? I can trade a 4-lot now. I made $2,000. I'm going to increase my size. It's another passport to poverty.
It works really, really good until it doesn't. And then,
Until it doesn't.
and then when the markets get volatile, you know, the cut rate intraday brokers like that are the first ones to shut you off of that, you know, 25% or 50% or whatever, and go 200% margin on the day that you should actually be not necessarily participating 100%, but you should be ready to, you know, make a move if the move's there, you know, and then you're trimmed back to you know, only being able to do a quarter of what you were doing the day before when the market setups are.
Going back to what Pete was saying, you know, you overtraded the day before. Because you overtraded the day before, you're going to miss the opportunity when the market is telling you to size up. You're going to miss that opportunity to size up because, you know, you overtraded in the market that literally didn't do anything, or you overtraded in the market to try to catch a 15-handle wiggle. When a wiggle isn't going to make you wealthy, a move is going to make you wealthy. And we all need to know the difference between a wiggle, the noise, and a move. We all need to know the difference between the wiggle of a market, the noise of the market, and an actual move, and what that means, and how we define that, and how we're able to take advantage of that. That's how you make 6 figures in a trade. That's how you make $150,000 or $160,000 in that run up from 39.12, from 37.26 to 43.24. How you're able to pull $250,000 out of the market trading the minis. What was the biggest position you had during that time in that rally? Do you remember, Jake?
This last go round?
Yeah, the last big one when you're trading minis.
Probably 24 minis at 24 minis at a clock.
When you had that on, what was your risk on that 24?
Probably the same risk you'd have on 8, you know.
Why was that? So basically you had no risk after you paid for your trade initially.
Yeah.
So you start off with maybe 6 or 8, you take profit on it, you got 12, you take profit on it, you add another 10, now you've got 24 on, and you've added now you added 37. The market, I keep using that number arbitrarily. You added 37, the market stays bid above that entry price, you pay for your trade again. Those trades happen, and every single one of you guys here, all 147 of you that are listening, have seen trades like that where the market just starts just gets up and goes. You might have a position on, and you're congratulating yourself for taking 15 handles out of that trade, and that market just continues to run and run and run and run, and you know, you pat yourself on the back, good job, I took 10 handles out, and that is a good job. That's a good start. That's a solid start to building, to allowing the market to size you up. But you've got to learn how to do that, because that is how you're going to make remember the 4 lanes of traders I talk about all the time, the 4 types of traders. There's a roller coaster trader. I enumerate everything so that they make sense to me and hopefully make sense to other traders. There's the roller coaster trader that's consistently losing money. There's the break-even trader, and I think that's where we spend the most of our time. Pete was in it for a long while. You were in it for a long while. I've been in and out of it for many years. You break even. And then there's the consistently profitable traders, the 3rd lane. And then the 4th trader is the ultimately profitable. Consistently profitable trader is going to make money pretty consistently. And they've learned, remember the 2 earlier, I talked about the 2 parts to every trade, managing risk and managing profit. Traders that are consistently losing money don't ever learn how to manage their risk properly. Traders that are consistently breaking even, they learn how to manage their risk, but they have not learned how to manage their profit effectively. Traders that are consistently profitable have learned how to manage their risk, certainly, and learned how to manage their profit consistently. And traders that are ultimately profitable have learned how to manage their risk, certainly, and learned how to manage their profit, but they've also learned how to exploit their profit. They've learned how to let the market size them up. That's the whole key to successful trading. If there's a holy grail, and I say this all the time, if there's a holy grail, it's knowing when to go big, go small, and not at all. When do you decide not to trade, as Pete said earlier? After 4 trades, 5 trades expensive, 4 or 5 expenses, you decide not to trade, that's it. You make $250,000 in a run up in the market. How do you decide to protect yourself? How do you slap them on? You get stopped out. The market doesn't go. You get stopped out. You decide the market isn't giving it to me. And so I'm going to wait until it does. I'm buying 30. And the way that we know in our group, the way that we know that the market is cooperating is I buy, again, the arbitrary number. If I buy 37s and the market goes 37, 38 bid, 39 bid, back down to 37, and it stops me out for a scratch. Now, let's go through this real quick. If I buy 37s, I'm going to pay for my trade with 4 points, 37, 38, 39, 40, 41. I'm trading for all of these years. I still have to count on my fingers. So I buy a 4 lot of 37. I pay for my trade of 41. The market goes bid up to 41. I pay for my trade. I'm long 3. The market comes down and stops me out. It doesn't extend the rally, which we had a lot of that last week. So I take a hard scratch. The market goes back inside the opening range and kind of messes out, comes out again. I buy 37s. Next trade, 36 half offer. I pitch them at 36 half offer. I take a 2-tick expense. That's 1. I buy 37s again, 38 bid. I put in a hard scratch. I get stopped out for a scratch. That's 2. I've got the market is clearly telling me it's not going anywhere. I've just gotten stopped out 3 times out of the same trade at the same price. The market is clearly telling me that it is not going anywhere at that time. Now, 37, like, that day, Pete, what was that opening range where we traded down? Or no, both of you guys will know. The low was 39.12 half last week. The opening range was 39.16 to 39.19. What day was that? Thursday? 17th.
So Thursday, yeah.
We couldn't have asked for our group. We could not have asked for a better opening range. It could not have gotten, the trade could not have gotten any clearer. And if I'm looking at a chart in retrospect, oh my God, what a clear opening range. I should be long. I should have been long. It should have been a great trade, but we're traders. We don't have the benefit of hindsight. We have to make real-time decisions using real-time information. That's why I don't look at charts during the day. I don't ever make a decision off of a chart. And I'm wondering how many people think I'm making that up when I say that. When I was on the trading floor, I didn't have access to charts. I knew Mickey Hoffman taught me my godfather, the man that meant so much to me in my life and still does, even though I don't talk to him nearly as much as I should, but I love that man with all my heart. Anyway, taught me to write out my plan in the morning, to know what I was going to do before the market got there. I don't make trading decisions based off of charts during the day. I trade off of domes all the time, and everybody in our group trades off of domes. If you come into our group, Pete will walk you through it. The fuck was the point? Oh, that Thursday opening range. So, in real time, it was choppy, 19 bid, 20 bid, back into the opening range. Buy those 19s, you're selling them at 18. Buy those 19s, you're selling them at 18.5. No good. I'm shutting it down. The market isn't giving it to me, but I know that if we get below 39.12, we are going lower. So I sat there and I was ready for that. And I also know if 39.12 holds, I know we're going higher. We're going to target 39.74. We're going to target 40.05. We achieved both those targets. We achieved both those upside targets, but I didn't have anything on. I missed that entire rally because I decided to protect myself from myself. I could lose a lot of money over trading an opening range, even one that is very clear to me or very clearly going to be the pivotal area. 39.12 is always going to be one of those biggest targets for us in our plan. And that opening range was difficult for me. I think it was difficult for most of us. It was difficult for me. So I stopped trading.
I didn't catch it either.
Did it bother you that we had a rally that fit our mold and we didn't have it?
No, but I still had a runner or two on. So, I mean, I was ready to get some stuff scratched out at 39.12. We got within 2 ticks of there. So, I mean, no, it didn't bother me.
I still left my scratch. I left my stop in for a scratch at 38.97.75. I'm still long those two.
Yeah.
Okay, nice.
So.
Not so nice when we're down to 39.12, and I thought you jagoff gave up 100 handles.
It doesn't make you comfortable wanting to put more on at that point, but that level held. That's
Well, in real time, in real time, the market traded down at 39.12 half before the open, in the overnight session off that number.
Right.
So that's not our bailiwick. I'm not going to take that trade outside of regular trading hours, even though it's at a major level for us. If the market would have traded down there on the opening range, that would have been a great trade. I would have been long there. It would have been easy. It just wasn't easy. And if it's not easy, I don't want it. I would rather miss the entire, that's the whole point of this. I would rather miss the entire move than to overtrade trying to find it. And I missed it. And I did, but the point is I didn't overtrade trying to find it, because the one thing I do know, oh my gosh, if there's one thing I do know, there will be another trade. There'll be 1,000 other moves in your career, Jake and Pete, from 36.63 up to 40.05 or 43.24. There's going to be 1,000 of those moves in your career, and we need to be there for them. The move from 39.12 to 38, I forget what the high was, 39.92 or 93 on Friday. We'll have tens of thousands of those, and we'll catch those too.
Yeah, and the thing I want to add is like you can read the PAX process in 15 minutes and understand it, right? It's pretty simple, long above, short below. You can learn the mechanics of executing, get your hotkeys, get your screen set up. You can learn how to enter and exit quickly, scratch, and read the price action. It takes time, takes a lot of screen time, but it's just like a matter of time to get that. And then you can anticipate a trade. You can have all the levels. You can see it. But if you're not there, if you're not balanced, and you haven't done the work to actually be there, balanced, emotionally, confident, what PAX says, CCFF, if you haven't done that and you're not in that zone when the market's trading there, you're going to have fear, you're going to hesitate. You have to also be there emotionally and be emotionally balanced for that trade setup. And that's the hard work, and that's, yeah.
That is hard work.
Yeah. You can anticipate a trade, but if you're not there for it, emotionally.
Hey, somebody, so I just looked at some of the Twitter. Somebody wrote, sadly, anybody selling multi-tiered service is likely a smoke seller. The real Armo said that, Scott Chegg. And dude, you're right. But I'm not selling shit. And, I'm not going to sell anything. I make my living as a trader. Everything I make in the PAX group goes into my life insurance account. Not that that's any of your business. But if you have any, anything that you want to talk about or anything that you want to challenge me on, feel free to unmute and raise your hand. I'd be happy to address anything. I've been doing this for 25 years. I love, like I said earlier, I was going to be a Catholic priest. My wife said to me a few years ago when we started the group that I get to combine the two things I love most, which is trading and teaching. And it's the two. I was going to retire at 35 and teach at De La Salle High School, the high school that I went to on the south side of Chicago. I didn't. I got divorced when I was 34, and I had to start all over again when I was 35, 36. So I did not get a chance to do that. Now I get to meld those two things together. This job, this business is the greatest fucking business in the world. And if all you can do is troll around and act like an asshole, you're doomed. Now, if you want to keep an open mind, because if you want to keep an open mind as to who's who, my name, call Terry Duffy, the chairman of the CME group, and ask him who I am. He'll tell you. I've traded more NASDAQ than what you will trade with most you with. I've traded more NASDAQ in a month than what most of you guys will trade in your career, both on the floor and off the floor. I am who I am. I'm legit, and you can check me out. Call Terry Duffy, chairman of the CME group. That's easy to do. Now, go ahead.
No, and like I said too today, nobody's selling anything. If somebody wants to find any one of us here, they can figure it out. It's not a problem, but that's not the point of.
I just wanted to address that because he's actually right, because most people out there are doing, that have these multi-tiered systems. Those are the frogs you just need to kiss. How many times? I don't know how fucking people do it. And I don't even want to talk about this. I don't know how people do it. That aggravates me when people say shit like that, at least about me. It aggravates when people say it about me, but I know that there's a lot of shysters out there. You know, you want, and another question, here's a question about sizing up. Where the hell did that go? I got all aggravated with that dude. When and how to either add to or take from your position at key targets. That's from, I'll butcher your name if I try to say it. Emerage, yeah, I'm not going to try to say it. Oh, wait, on Twitter, he's at Bullfrog Boxer. Okay, when and how to add to or take position at key targets. So the way that I do my technical work, again, comes from a guy named Howard Green, who was one of the greatest technical analysts in the history of technical analysts. I need to make real-time trading because I'm a trader. I'm not a technical analyst. That's why I talk about the difference between technical analysis and technical awareness. Pete's son just woke up, so he's got to go get him from a nap. His wife is working in Europe. I differentiate between technical awareness and technical analysis because I need a technical analysts are going to make decisions, with the benefit of charts, with the benefit of hindsight. But I'm a trader. I need to make real-time trading decisions using real-time information. So I have a specific way that I do my targets, and those targets, put 3663 on a chart, 3726 on a chart, 3871 on a chart, 3912 on a chart, 3974, 4005 on a chart, 4099. Put those on a chart and see how the market acts and reacts at these levels. These are my real-time levels that I'm going to use my opening range breakout method that I'm going to trade to. We opened, for example, Friday. Opening range was 39.87. Bottom of the opening range was 87. The top of it was 92. I like that opening range. 92.94 is a big area that in the S&P, not a big area, but a good area. Some solid resistance that we need to break through in order to continue to rally. Now, and I told all of the traders in that podcast, I said it live, or I could even talk about crude because I said it live in that podcast too. Take profit down to 37.55. I said that at 26 minutes in that podcast on Friday. I said, take profit, take a lot of profit. Crude was crashing at that point. We're down like $3 on the day, down $1.50 from the opening range. Take profit. That ended up being the low of the entire move from that angle. Now, again, I don't make big market calls. I just use real-time information to make real-time trading decisions. And to be clear, I was not short crude that day. We were making a decision on the event contracts. Now, Friday opening range, and I missed that because of coming in late, but 39.87 to 39.92. I'm long above 92 and I'm short below 87. We never got above 92. The 91.75 was the high of the opening range. When the high of the day is made in the opening range in real time, that is a bearish sign. The high of the day was made in the opening range, and in real time, that was a bearish sign. So I want to be short underneath 87. I'm going to pay for my trade. I'm going to sell a 4 lot at 87. I'm going to pay for my trade at 83. We had a major target that I've talked about at 39.74. I wouldn't have taken profit there because it's too close to the opening range, but I would have added underneath it. So let's say I'm short 4 contracts. I buy one at the pain line at 73. We get down to 74. Maybe I would have, I wasn't trading, so I can't say what I would have done. But if I was, let's just say I'm sticking to my process. I buy one at 74. We go 74 offer, and I'm adding another 4 lot. So now I'm short 6. I pay for that trade at the next price point, which was 66, and then I take profit at 59. So I'm short 6, I pay for the trade, I'm short 5, we get down to 59, I'm short 4, I take profit. We get through 57, I sell another 4. All right, now I'm short 8, pay for the trade, take profit, I'm short 6, we get down to 44, I take profit on those, and then the market starts working back up through those targets. I take profit as we come back up. Ladder rungs, the market moves in ladder rungs, one to the next. The ladder rungs on Friday was 87, tight ladder rungs, but ladder rungs nonetheless. 87 to 83, 83 to 74, 74 down to 59, a little bit more space, 59 down to 44, then back up, 44, 59, and so on and so forth, back up to the opening range. We ended up coming back into the opening range late in the day. So that is how I'm going to, use my daily plan to try to size up a little bit, but in a broader sense, I'm going to use the opening range to get me between these bigger targets. So 39.12 takes me up to 39.74. Above that takes me up to 40.05. Okay. And then above that, we've got last week's high, which is 40.50 and then 40.99. But if we can close, if we close above these levels, then I'm going to be trading from the long side as long as the opening range takes me there. So I'm going to add, when like the move that Jake caught, Jake got long at 36.63, and I can't remember the opening ranges, but he got long. The bottom of the opening range that day, by the way, was 36.64. So he got long that opening range. That the high of the day was 37.26. No. We got up to 37.26 in that same day. He took profit at 37.26, and he added a full unit above that. You got to look at a chart, Jake, and tell me what day that was. Because the high of that day, I believe it was a Friday. The high of that day, the opening range was 36.65-ish. We got up to 37.26 during the day. The high of the day was 37.59-ish, and then we closed at 37.52. And then we rallied, that we continued to rally above 37.26. We came back off the next Monday, but we continued to rally up to 38.71. Using the opening ranges, we got up one level to the next, to the next, to the next. So you take profit at these levels, you use the daily plan to guide you through the opening ranges, and you take profit as the market moves up. Does that make sense?